there, traders. Welcome to the Wednesday webinar. I'm Todd Gordon, founder of TradingAnalysis.com. I've got the trusty team standing by here. We'll bring them in 1 second. We'll say good morning first. Good morning, guys. How's everyone?
Good morning.
Good morning, Todd.
Good. You guys
Beautiful fall weather.
Yeah, we have the same thing here. A little rain with sun's out, leaves on the ground. You don't have leaves on the ground in Texas, do you?
Oh, hell yeah.
Do you?
Oh, yeah. Certain trees, right?
Certain trees. Shows how much I know.
Lots of reason for peeping.
Alex, don't start with this. All right, Alex. You guys know Alex? Wait, let me get this right. I'm going to do my best weatherman. Alex heads up our FX and crypto. New addition to the team right here. Bennett, Tyndall, coming out of Texas as well. And you guys know Terry. We'll bring them in. And sorry for a typical late start here. I think it's just par for the course. We will get it at some point. Yeah, we have a lot to talk to you about here today. Obviously, we're in the throes and in the very beginnings of, or I should say, we're kind of in the heart now of earnings season. So futures were kind of flat here a little bit. We've got some positions we'll talk to you about. So we'll bring the team back here in 1 second. So a good feedback too on Bennett joining the team. You guys have seen him before in the webcast, and great person first and foremost. Second, wonderful Eliotician, very particular guy, intelligent, trades real money, real capital, along with our calls. So he was a perfect fit for the team and somebody I had my eye on for a while. So expect great things out of him. If you will, be sure to throw your love towards Bennett. All right, so then we will bring Alex in also to look at the cryptos. I know he's looking at the short side in the crypto market, but let's kind of take a look here to start what's going on in the broader markets. Let me just do this. Let's just do this one. Here we go. Okay, so as I said, earnings season is upon us. Last night we had Texas Instruments. We had, what else we have? We have actually Microsoft coming up tomorrow. So that'll be interesting. Chips are selling off there last night a little bit. TXN is one we're going to watch as semis are pressing the highs. NASDAQ was down pretty good yesterday. And if you looked at the QQQ, compared to the XLK, you saw a pretty big difference. If memory serves, yesterday the QQQ was down about 0.63% at the close, where the XLK was down like 1.1%. Obviously, the difference, well, not obviously, maybe, the difference is XLK has pure technology, where QQQ is kind of a broad range. And you could kind of see that here as we go over and bring Thinkorswim in and just do a nice little visual representation of those two indexes. One's a sector spider, one is an index. So let's go like this. Let's go QQQ. Let's go Market Watch, and then we'll go like this. Let's start with the NASDAQ 100. Okay. So obviously there's we have a pretty good cross section. We got technology, got communications, consumer discretionary. You've got staples in there. You've got healthcare. So just keep in mind the NASDAQ 100 is not a pure technology play. But then when you go over to XLK, let's just bring this guy over and go personal XLK. We saw a pretty good. You see a pretty good representation of pure tech. So if you look down here, you have a sector right here is all information technology here in the XLK. And if you look at the breakdown here, we can sort by industry. You've got semis, you've got technology hardware, some communications equipment, software, IT services. What you saw yesterday was a pretty good sell-off in technology, a lot of which I think was sort of profit-taking because we've seen a good move up in this XLK prior to earnings. So I didn't like it because we're more heavily skewed towards long technology, but I do think it's kind of position squaring ahead of the report, which I'll show you here, the charts here in a second, that we will resolve to the upside. The other thing I want to talk about is the other newest sector, which is XLC, which is the communications. And the top 10 holdings in XLC will report between now and the next 3 weeks, with the exception of Netflix, which is already reported. So if you sort by XLC by the weightings, you know what I'll do here, once we go through the indexes, take you through and show you that I think this sector is actually pretty well poised to break out here as we're heading into earnings. So all of these charts I would buy. So I'm actually going to set up a trade with our members today after this in XLC to take us through earnings, because again, I like to have exposure to all of these stocks going into earnings. So point being, I had a pretty good P&L drop yesterday. I'll show you my positions. I'll show you, the good, the bad, and the ugly. That's what we do. But I think it's just squaring ahead of the reports. So let's go over here, and let me make this full screen. And let me show you where we are. So I'll start with the NASDAQ. The wave count that we're in, I believe, is going to be this red interpretation right here. It's possible that we just completed a big triangle here in October, and we are now moving higher in a 5-wave move in blue 5. All right, so off of the daily, and we get up to the weekly to give you some perspective here. I will hide everything but this degree right here, which is the should be super cycle. We've got to demote that a few degrees. That's not accurate. But the point still stands, which is I think we just saw a big wave 3. We're moving into, as I introduced last week, a pretty peculiar wave 4 correction, okay, which was W up in X and then into triangle Y, which would give way to a wave 5 rally. The implications are at least to the upper trend line, which would be 885, 9,000 NDXs. We're at 78. So, we have quite a long ways to go here. So off of the weekly, let's get inside of this correction and see where we're at. All right. So here's the daily, and this is the triangle in the final Y wave. And I had some comments last week, which was interesting. People didn't know that you could have a triangle in the final Y wave. And if you look at the Elliott Wave book that Prechter wrote, it's absolutely allowed. So again, this is the model that I'll draw here. So this is your first W wave down. There's W, okay? Then we have a little X wave rally back up to new highs, which is what we did here. And then the final Y wave can unfold in a triangle, which is quite unusual, right? So that's, I believe, what's happening here, which should give way to a new high in wave 5. So if the Y wave triangle completed, it'd be A, it's B, it's C, it's D, it's E right here. Let's get inside of this and say, do we have impulsive evidence on the upside? So as we get off the daily, down to, let's cut that day in half. Let's go 195. Let's see what we can see here. Okay, so if you recall, this is the completion of the triangle. We've been tracking this, and we track this for you. I believe if you look at this live, and I'm going to bring Bennett and Terry and Alex in on this, we gave you this must-hold level, I believe back, or actually 2 weeks ago here on the 8th. 8th and the 9th. Let me just see. Let me look at my calendar. Yeah, so the 8th was Tuesday, and Wednesday was the 9th. And if you go back and look at the 9th webinar live stream, I believe we showed you that this is a must-hold level into the 61 and 78%. Excuse me, this is the should-hold level down from 61 to 78. If you break through 78, you start getting into the red danger zone where you have to hold. We did hold, and we've rallied quite well from there. Not only have we rallied, but we've rallied in a motive, impulsive fashion, which indicates that perhaps the triangle and the consolidation that I just took you through that began back here in May is now complete. So the sell-off that I opened with, again, I took a pretty good slapping yesterday in terms of P&L because I'm pretty well long, focused on technology. I think potentially is C wave of 4, which would square up against this wave 2, which should resolve higher. Okay, I have the NDX trade on. I have a call butterfly on. I do think we'll start to move up to 82, and I'll show you the trade. It is down money right now. So let's go over here. I have it in my IRA. Trade NDX. Let's just go like this. Analyze NDX. All right, so this is just full transparency, guys. First trade I'm showing you is so far a losing trade. So here's the P&L. I'm down $800 on this right now. We have the 8150, 8250, 8325 broken wing call butterfly. So this is the profit and loss profile of this particular trade. If the market were to absolutely crash in order to hold this to expiration, it'd be down $2,200. If it works perfectly and we get a pin, I could make upwards of $16,000 if we move up to 8250 area. And if the market absolutely crashes higher, let's say, I'll make $2,800 at expiration. So again, if you look at the strike and look at the body of the butterfly here at 8250, why would we select that strike? Well, if we could begin to move up into wave 5 territory, up into 81, 82, you know, for this angle of approach, it doesn't look obnoxious at all. I mean, we could, you know, if you look at how long it's taken to rally from 7,500 to 7,900, that's 400 NASDAQ points. We've done it from October 3rd to October 17th, so it took 2 weeks. So can we see another 200 to 300 points in a wave 5? We don't need to get all the way up to 8250, which would be, you know, that'd be a pin, that'd be perfect. But if we can get up into this zone, into the 8100 region, you know, I mean, that's still a couple $1,000s profit, right? A couple $1,000s profit. So that would be fine. You know, we couldn't hold this to expiration. We'd have to get out of this here pretty soon. And the trade isn't designed to take all the way into expiration. So we're just trying to look for this little bit of a move up here. It is a completed 5-wave move. That's why I just didn't want to buy calls or buy a call vertical because, you know, we do have this wave 4 to contend with, which is what we're dealing with. The sell-off that we saw yesterday, I think, is just C of 4 before we kind of regain our footing and push higher. So let me bring the team in here. Guys, I'm going to put you on notice here and just bring you in here. How's it going so far? Is it making any sense?
Absolutely, Todd.
Good. Oh my God, my kid, I'm exhausted. I full disclosure. He lost his first tooth yesterday. And he was so excited that the tooth fairy came that he came in at like 2:45 in the morning. And the tooth fairy put glitter on the money that the tooth fairy left him. So this is tooth fairy dust. He was so excited.
Now you got to do that from now on.
No, only the first time.
It's the new norm.
Oh my God! But he was so excited. He kept us up for until 4 before we could settle him down.
Oh my gosh.
Oh gosh.
So anyways,
the joys of parenthood, right?
That's all.
Yeah. So with twins, you know that the other one's going to get it right next. So he's going to be expecting it.
And he was so
double
pissed
trouble.
He was so pissed that he wouldn't share the money. Brody was so mad he wouldn't share the money with him in the morning. I'm like, he has to share.
You get your own teeth.
Oh my God! I was like, if you lost your teeth, you know you wouldn't share with your brother. So yeah, it was a bumpy morning.
Hey, I want to make one comment about that.
Yes, please.
Should hold, must hold. So even back on October 4th, and maybe we didn't do it in the live stream, but we did present that to our members as we were coming down into the bottom on October 3rd, October 4th. We pointed out a preliminary should hold, must hold zone there. We readjusted that zone after we moved up in wave 1, and we called a second should hold, must hold zone. So you got 2 winners there.
Yeah, we did. I don't know if I don't want to take credit on that because I don't know if I'm just adjusting your screen.
Yeah, I think we probably shared it with our members. I don't think that was that probably came after our Wednesday live stream, but
okay.
But it was we were bottoming in there, and we had a little spike below the 786, and it shot right back up, and I remember all that. So
right. I'm
with you.
we had right. I think we just said we had a should hold level here, and a must hold level here down in E of 4. We rallied up, and then we did the same thing again. So basically, we called the low twice, right? And that's when we put the Nasdaq butterfly on. I was a little late, and let's talk about this for a second. Whether you're doing a trade or whether you're doing an investment, the entry is so important. And you guys know, like I think probably my team doesn't even like it that I criticize myself so much because I'm quote unquote the leader of this very talented team. But I'm not happy with my entry on that Nasdaq.
We were a little late.
We were late. And I think you got to kind of think about it that entries. When you're doing this kind of precise technical analysis and entries, like we can, though we called this low and we did it for you 2 weeks ago live, we didn't get in the trade. I'll show you my entry until like up here. I was waiting for too much confirmation. And I think it's an important discussion to have. Is it because I'm slacking or is it because we're a little gun shy because the market has been incredibly range bound via a triangle since May of 19? Could go either way. I think it was a combination of both. Like if you truly are firing and you're anticipating entries into support to buy and selling, taking profits into resistance or establishing shorts into resistance. I mean, that's when you're trading well. When you get good entry prices, gives you a lot of power. So I just want to criticize myself a little bit here on that. And if I just go like this. View trades. So I put the trade on 10:14 at 9:50 in the morning. So let's go back and let's just kind of criticize my entry here for a second. And I think you always have to do this to learn and to improve. So 10:14 was right. I mean, it was right here. We didn't get in until the fourth wave of wave 3, right? We should have been long down here. And the only thing I went through this with Alek, Bennett. You're going to go through this. You're a very good trader. You're a very good Elliottician, but you're stepping into the quote unquote limelight of our industry here. You're trading on a hot stage, and it's going to be a little bit of a. You're going to find your comfort zone. It might be a little bit of a struggle. I'm just warning you, and everybody goes through it. Trading live and having confidence, to pull the trigger because you're like, oh, I have so many people following me, and we're doing these live shows, and I don't want to get in your head, but I'm just saying it's completely normal. Alex went through it. I went through it. So just look out for that. Just have confidence in the methodology.
One thing, trading your own money, because you got you have a good understanding of your own risk.
Risk tolerances, absolutely.
Risk tolerance,
And
so you just have to be very clear when we're making our recommendations for the clients that they also understand risk management very clear. And we try to reinforce that. When we don't advocate trading the bottoms. I don't like catching a falling knife, but when we see clear evidence of significant support levels, resistance zones, and a confluence of signals, I'm open to putting in small positions, very small positions to test the waters and then look for that confirmation.
Yeah.
And then we add to that position or we make a better position out of it. But we don't do that routinely.
Let me just say, you just said something really interesting, Terry. We don't like to catch a falling knife. Everything is relative, right? If you get inside of this 15-minute chart and blow up this time frame here, it depends on where the Y and X axis are positioned. Like if you were to look at this chart that I just blew up and you say, well, would I want to try to buy this sell-off here? Well, okay, on this chart it might look scary, but if you adjust the axes, if you adjust it, you might realize, okay, we just had a pretty strong uptrend and we are buying a three-way pullback down into support. So it all depends on what your context and your time frame is and the purposes for what you're trading. What are you trying to accomplish? How far out are your options going to be? Or maybe you're doing the futures or the stock side. So you got to have time frame. And that's why we love Elliott so much, is because it is fractal nature. You can look at the wave count at any degree of trend. And the answer to the age-old question is, what's the proper degree or proper time frame to look at? It's what are you trying to accomplish in terms of making money? How much you want to risk? What vehicle are you trading? How much are you looking to make? And that depends. If this wave 2 is going to require you to risk 7650 down to 7500 if you don't want to risk 150 points via the Qs or the XLK or some kind of option butterfly or option strategy. If that's too rich for you, that's not the time frame for you. You got to trade a different time frame. And this wave 2 sell-off exists within, this little wave 2. There's something you can do within this little 3-wave move, right? So anyways, so that's that. Let me just launch this. I just want to take you guys through one more thing. I want to go through the XLC exercise, and then Bennett, do you want to hop in here and show them what you have to show them?
Yeah, absolutely.
Okay, perfect. All right, so and let me just get that. I'm sorry, we're not addressing questions. We've got to get this feature where we can pop your chats up. This is something we will get done. We can pop your chats up right on the screen so we can address them right away. Okay, so please don't think we're not interacting. Okay, so let's just do this. Let's just go through XLC. I shot a trade yesterday for CNBC. I executed. Charles Schwab sponsors a show. We're actually live trade on CNBC called Trading Nation. I shot a trade for them yesterday, and I just want to take you through. I am going to execute with our members as well. Speaking of CNBC, I am on CNBC tomorrow. I have Power Lunch, Trading Nation, and then Fast Money in the city tomorrow. So this is the newly formed XLC. It's already been out for over a year. Look at that, June of 18. It looks like there is some kind of triangle going on here. It could be A, B, C, D, and E, which does mean we should be able to move up into the mid-50s. So what I wanted to do is just take you through the top holdings of XLC, just do a quick scan and show you what this communications looks like. So let me just go like this, restore. Okay. So we're doing weekly on the left, daily on the right. And let me just find my, okay, so we're just going to go like this. XLC is going to be right at the top. Sorted by weightings, which is accurate. Okay. So first one, let me just go through the, actually I have it in Slack. Let me just read when the earnings are going to be. So we have, let me just copy this notepad. Okay, so this is the earnings lineup right here for XLC. So we have Facebook on October 30th, Google on the 28th, Charter on the 25th, and Verizon on the 25th. Josh Brown yesterday on Fast Money Halftime Report made a good point. One that he said that some of the cables, like the communications like Charter and Verizon are charting extremely well. And I just shot the trade earlier in the day. AT&T on the 28th, again, that chart's looking pretty good. Activision, 7th, Comcast 24, Netflix already reported and beat. Disney's on the 7th, and then Twitter's on the 24th. So I just want to scroll you through these quickly and just look at these charts. And this is an exercise we do with our members. We look at general trends. We look at relative strength. We look at where we are against key moving averages that everybody looks at. So I kind of look at my Thinkorswim platform here as my kind of elementary or traditional technical analysis platform. And then once I get an idea of what the trends are doing, then we'll flip over to Motive Wave and do the Elliott Wave analysis. So here's Facebook to start. Let me just get him scaled correctly here. Okay.
Facebook's been out of favor for a long time.
It sure has.
And now we're starting to see maybe a break in the consolidation. So
I think so. And Zuckerberg's on. I don't know if there's going to be anything coming out of today. Zuckerberg's in Washington. I think he's testifying for at least 5 hours today. I think on the top of the docket was Libra, and they're not going to announce until he's got full congressional support. We'll see if anything else comes out of that. So Facebook looking good, I think. Number 2 biggest holding in XLC is Google, and I think this thing looks great. I think this thing is just knocking on the 1250 door, ready to go. Charter Communications, this one really snuck up on me. I looked at this chart and I was like, whoa, look what Charter's been doing. We just broke to new highs in Charter Communications. Can't believe it.
3 months ago.
Yeah, amazing. Visa? Visa.
Not one on our radar.
No, not one we usually track. And then Verizon, same thing. When you get a 1, 2, 3 quadruple test of a level, usually that level's going to give. So 61.
Well, you got 5G rolling out across the country,
Yep.
and that's something new, right? So that's I think that might be propelling business also.
Yep, exactly. So there's AT&T, not great, but I think the stock is acting well. There's been a lot of discussion about how much debt that AT&T is carrying on the balance sheet. It's kind of weighing it back here a little bit. But to your point, sort of rising here in anticipation of the new 5G launch. Activision, I think video game stocks are coming back in favor. Not a great looking chart, but okay. I wouldn't mind being long it. And then we have Comcast right here. Same thing. I mean, just a strong chart following Charter. Wouldn't mind being long this guy at all. Netflix beat earnings, but just can't seem to get out of its own way here. It looks like Netflix is in a little bit of trouble here on the sell-off. So they reported $1.47 on 107 expectations and had pretty good subscriber growth, and they can't hold the bid. So it's the one concerning stock, but it is only the 8th largest holdings within the XLC. And then Disney. I think Disney has a nice three-wave pullback here. ABC pull back into the 200-day moving average. I think it looks fine. Kind of squeezed between the 50 and the 200. Bollingers are on top of each other. We're also down to the 50 EMA on the weekly. So, I mean, you've got just traditional moving average support both on the weekly and daily in Disney. So I think we're looking good there. And then I know Bennett,
Disney's got a lot of good, strong lineup. They've got the Marvel Universe, they've got Star Wars, the theme park, Galaxy Quest opening up, new movie. They and then their streaming service is going to compete with Netflix and all of the Disney products that everybody has loved and watched for years will all be on their streaming service. They got a strong lineup, and I really like them for the long term.
Yeah, and they've got a strong onboarding process. I think Disney streaming is free for the first year. They're going to give away for free, and then I think it's going to be like $69 a year after that. That's going to be hard. That's hard to say no to.
Yeah.
And then Twitter. I think it's Terry and Bennett. I think it's your two favorite. Both of you guys. I think this is one of your favorite. One of your favorite favorite stocks, right? I mean, you guys want to put the option trade on Twitter, I believe, correct?
Yeah, I was looking at this. I think also he was using that new sector rotation tool and drilling down into the individual stocks inside the communication sector. This one kind of piqued my interest. It might be the first one out of the bag, so to move up out of the lagging zone. And so I think if you have a wave count on this or not.
I do.
I think the wave count we put together shows us approaching a end of a fourth wave, and the turning point coming up really soon. So I like this one.
Oh, okay. I think you. Oh, I see. Oh, right. You had a 1-2.
Or this is a wave 2. Okay, this is a red count. This one's got a wave 2 in it. So. Oh,
are you tracking the blue count?
I may have a different count on this one personally.
Okay.
But that's fine. That's fine.
That's not valid right there. Yeah. So Twitter seems to be Twitter's in pretty good position here. Nice little pullback here, little wave 2 into the 61% relationship.
Yep.
Pretty good sell-off there yesterday. Again, everything is just kind of getting hit here ahead of earnings. So I got to tell you, I don't mind sharing with you guys.
Yeah, I don't like that engulfing candle you had there. Was that a down
Terry,
bar or was that a nut bar?
But hold on, Terry. That's the point that I was making. That we are seeing a little bit of selling ahead of I think reporting earnings. So I don't mind it so much. So let's let me think. I don't mind kind of saying what we're doing here. Hey Alex, we're gonna bring you in here in 1 sec.
Sure.
Okay, good. So let me go back over here. So kind of lost track of what I was going to say. I forgot. Anyways, I know what I was saying. Terry's doing some really good work on sector rotation. I don't think we're at a point where we could show you what we're doing yet. But through Terry's work, what we're seeing here is you're seeing XLY and XLC. We've been talking about the communications sector. We've been talking about the consumer discretionary sector kind of rotating into favor. I would say they're a couple weeks behind technology. XLK, the technology, has already made the run over the last couple weeks and is actually getting a little overdone. Followed closely behind, as I just said, discretion and communication, which those are the three main sectors you want to see firing if we're going to be rallying. So I like the improvement in XLY and XLC. But what's also happening is you're seeing a resurgence even below communications and discretion. You're seeing a resurgence in industrials, materials, and financials. Okay, so you've got technology, it's already made the move. Discretionary and communications, which I think is on the brink of a technology-like move over the last couple weeks. And you've got financials, industrials, materials coming up, and healthcare is coming up too. So what that says to me is breadth. Okay, I think you're going to start to see very strong breadth numbers if we can get a break through this consolidation that we've been in for so long, because a lot of sectors that you want to see pushing the indexes forward are starting to show improvement. So, this is where I don't want to take too much time here today. This is what we're going to focus on in the member webinar. But you start to look at advanced decline. You start to look at how advanced decline is leading. And 2 weeks ago or 3 weeks ago, I did a presentation about how I see breadth was holding in very well relative to what the indexes are doing. And now you're actually starting to see breadth, I think, reaccelerate on the upside in anticipation of a Chinese deal. So yesterday, as I told you, I lost money yesterday, but I was like, you know what? I just think it's a shakeout before we get the real move. So we're starting to see some higher lows here, advanced decline. If you threw a moving average over this, I think we're going to start to see some good things. So, all right, Bennett, let me turn it over to you, if you don't mind. I just got to launch GoToMeeting here. And open GoToWebinar. Okay, sorry, that should be ready to go. Okay, Bennett, you are now live, sir.
All right, what's going on, guys? Glad to be back. So last week, we were actually taking a look at BABA and discussing the possibility of this post-triangle thrust development. And following last week's live stream, starting to see some evidence of potentially some impulsive action here. So if we just take a look at some traditional technical indicators here on the daily, you have the 50-day moving average here. We're trending over the 200 moving average. And this period of consolidation, higher lows, lower highs, appears to potentially be coming to an end. And given what we're seeing in semiconductors here, just given what we're seeing in the markets overall, this E wave, you can count a beautiful 5-wave move, have this B wave into a 50% retracement, a little bit of a shallow C wave. But following that, you can count 5 waves up and 3 down here. So I'm keeping my eye on BABA for a potential long into the support zone 165 to 167. I think this is a strong setup for additional upside. And if we were to just take into consideration the widest portion of this triangle and project it from the E-wave completion, that takes us up to about 262. A quality of orange 5 and 1 comes in at 250. There's also a confluence of additional fib extensions there. And I don't think this angle of attack is too aggressive or improbable. So getting you back off the daily down to the 195 and even down to the 1 hour chart, you can see this 5-wave move come to completion, down in A, up in B, down in C. So I'm watching this zone for a potential long BABA. What do you think about BABA, Todd?
I love it. It's shown really good relative strength to all the volatility we've seen in Chinese equities. Is there any way you could quickly overlay an FXI on the daily? I just want to. I have a feeling, I haven't done it. I just want to verify that we are seeing relative strength in the Chinese ETF compared to BABA.
Oh, you want a ratio?
You can do overlay or ratio, whatever you prefer.
I had both.
So, you could see it right there.
Mm-hmm.
You could see it right there.
Yeah, give it a little different color there so it stands out better.
Yeah, look at FXI retesting the 2019 lows, where BABA is nowhere near the 2019 lows. Early 19. Yeah.
Exactly. And you can see this divergence in FXI as BABA continues to to set higher lows there. And in fact, I was actually looking at the instrument ratio. Where'd we go?
And while you're doing this, go ahead, just take a second. I just got a text from my friend who actually, believe it or not, works for Goldman. And he just sent me this text and he said, I hope I'm not putting him on the spot, I'm not saying any names. He says, EEM, emerging market breaking out, GS came out with a trading call, these calls. Hope I didn't just get you in trouble. But Goldman is Goldman's on the call for emerging markets. And that's kind of been my premise for months now. And I could go back and show you some. Emerging markets, though, it's been weak over the last 2 years. Over the last 6 to 9 months, has not been confirming with new lows. It happened actually all of 2019. EEM is not going. 50% of EEM is Asian equities, and that's why FXI and EEM overlay so well. So you have Asian equities in the midst of a trade war with the U.S., the two biggest trading partners, but yet the equities of China are not confirming with new lows, even when we see bits of volatility like we saw in early 2019 and late 2018. And then you have a strong stock like Alibaba, who is showing better relative strength FXI. I think there's something going on here. And I saw my friend JC Peretz also just text this, or he tweeted this morning. He's like, there's been times where technology is not working, but EEM is coming back. So I think there's something going on here. There's nothing happening yet. I just can't wait for this consolidation to end. You look at EEM, big old triangle. You look at FXI. You look at you look at Bennett's charts here. There's really good relative strength in these Asian equities. I can't wait to see the resolution. It's going to be pretty unbelievable. So please continue. Sorry.
Oh no, I agree. Definitely looking forward to that.
That was an airtime trick just to buy you time as you set things up. Just kind of fill in dead air.
And if we take a look at the instrument ratio here into FXI, you can see outperformance here as well. So nice looking chart, and definitely into a zone of support that I think is worth starting to at least deploy partial allocation to the upside there.
Nice.
Yeah, we've been steering clear of these China stocks for, more than a year now. So it might be interesting to get back into some of those. Start taking a look at that Baidu. And,
absolutely, I completely
agree. I know Todd's
agree.
got a whole group of favorites too. So
Yep.
And we got 2 minutes to the open, so you want to bring in Alex and give him a chance to cover the crypto moves since we're touching 8,000 there in Bitcoin.
Absolutely, yes, sir. Let's bring Alex in. Good work, Bennett, as always. And I'm going to just do a quick on the fly here. Multi-view. We're going to take you out, and we're going to put Bennett in. And multi-view position 2. Okay.
Alex, you the presenter.
Alex, you're live, sir. How you doing, buddy?
Hey, buddy. All fine.
Good. Oh, so we're getting the move on Bitcoin.
Yes, sir.
Yeah.
This is the move that you've been looking for.
Yeah. Exactly. So it happened this morning. Actually, we had a member webinar yesterday, kind of analyzing this. And if we go on a larger time frame, and we see a few wave counts which I track, I will just quickly explain the difference. So we broke this less lows, which we expect, and now I think the gravity become more and more to these targets that we have. I also have this a bit of an older technical analysis, father and baby head and shoulder, which is very nice. You have a father head and shoulder here, and then a kind of a nice connection, and then you have a small baby one, which is working very fine, but measuring with the technical instrument, basically the targets are the same. So Elliott wave analysis points out, and I'm looking actually for this one because this one will actually reach my target until tomorrow. 618, it's going to expire tomorrow. In a time ratio between elapsed in a wave 1 and this correction. So as you know, I was mentioning how cool it would be that if we reach 618 and all of these FIP clusters here, which we have, So we have 100% W versus Y. So this correction will equal this correction here, 50% retracement, 0.618 for A, triangle B, and C down. So, and 618 time relation, all combining here in a flip cluster around 6.5 to 7,000 levels. So I'm wondering if we are going to see this drop maybe even sharper during tomorrow, and maybe there is a chance we're going to reach actually this time ratio to match up, because tomorrow is the day. So our overall analysis still works. We broke the levels, and I'm expecting very soon that we reach our final destination of this correction, and that we are going to start to load a longer term entries on Bitcoin with our clients.
I love it. Do you know how many people are going to just throw the towel in on Bitcoin on the break of 7,500? We're going below 5,000. And you've been ahead every step of the way, Alek. You're really doing fine work here in cryptos.
Yeah. This one is a bit more prolonged, because here also this works in the Elliott wave world. There is a 1-2-1-2 down in 3-4-5 to finish the green wave 3 up in 4 and down in 5, but this will take a little bit more time. So yeah. I'm going to look if we're going to see a pullback and then a slower or a faster in a wave 3, 4 and 5, 4 and 5, which will take us into November. But as I said, how cool it will be that if all of these three ratios matches here and we actually bottom tomorrow, then it will be a very strong mathematical case for the Elliott wave world, how all of this mathematical relation between the time duration and corrections are matching into clustering with the time and the price.
That's nice work. That's nice work.
So we're going to be on the lookout for that head fake move back up too. Yeah. So we need kind of, with this, the consolidation period being as long as it's been, there'll be significant resistance levels as we start to move back up. But Bitcoin moves fast. This is a fast market. It's almost as fun trading this as it is trading options. So
that's well put.
I just wanted to mention FX. Tomorrow is the Mario Draghi last day as the chairman of the ECB. And I have proposed last week this Bund chart in relation to euro. So we are finding support down in this fourth wave. So I think we're going to see this fifth wave up before the euro gets stronger. So translating this in our wave count, there is a nice resistance here in a 200 moving average. Also, I still think that we are not done with the move lower. So ABC is equal exactly here. So I don't see for now from the Elliott wave perspective any confirmation in a 5-wave move up that this was lows. So until I see that, I will actually look lower to this 1.08, 1.075, which I think it's going to be an ideal entry for longs for this ABC, while the bunds are actually going lower.
Wow.
So just a quick update on the last week charts.
Fine work as always. Fine work as always, guys. That's a wrap. Thanks for joining us. We have visions of splitting this off. We fit so much into this show. We have visions of doing multiple shows. Obviously, the team at TradingAnalysis is getting better, bigger, better. So there's a lot more to come. But first, we'll work on getting this straight, get Bennett on board. But a lot of fun things to come. So thanks for your support. Check us out at TradingAnalysis.com. Alek, Terry, Bennett, great job, guys. Thanks.
Thanks, Todd.
Yeah.
And remember.
Oops, sorry, I just cut him off. Sorry, boys. But anyways, yeah, obviously you can tell we have a great team at TradingAnalysis. So come check us out. Everyone's kind of firing and keeping you ahead of the markets, and you can see what Bennett and Alek and Terry are doing. So Check us out. As I said, I'll be on CNBC tomorrow. Members, webinar starts in 25 minutes. We'll see you guys then. Hopefully you enjoyed the webinar. Throw a thumbs up on that YouTube window if you don't mind. Let YouTube know that you appreciate the work. Throw a question, comment, insult, anything you like below. Let us know what you'd like to see. And thanks for joining us, guys. Hopefully it was helpful. As we take you into earnings season, S&P's down just 0.1%, NASDAQ down 0.3%, the RUT down 0.24%. Crude is acting a little weak here. Bonds just up a touch. Kind of more of the same consolidation here. We're getting ready to make a pretty good move. So we'll leave it there, guys. Have a good one. And if you don't join us at Trading Analysis, we'll see you next week. See you guys.